All right, welcome everyone. Thank you for joining us tonight. It is 6:05 p.m. Central. Happy Tuesday. Today is Tuesday, January 11, 2022. And yes, you are at the right place. 2022 tax season tips and changes, right? 2022 tax season tips and changes. My name is Jeff Badu, and I'll be your speaker for today. The way that we'll be hosting this event tonight is I'll be speaking for just about 40 minutes or so. So we usually like to we usually like to leave about 10 to 15 minutes at the end for some Q&A. One thing to note is that we ask that if you're not speaking, you just mute yourself, right? If you're not speaking, you mute your mic. That way there's no background noise or distractions, right? Anything like that. If we do hear some background noise at times, we most likely will mute you to avoid any distractions. All right. And so this is an event, right? It would be nice for you to take some notes. It would be nice for you to participate, ask any questions that you may have throughout the process. So the Q&A formally will be from 6:45 to 7 p.m. Central. There's two ways to ask your question, and number one is preferred. The first way is to type your question in the chat box. So there is a chat box in Zoom that you can type your questions or comments, anything of that nature. So you can type your questions in the chat, and then at the end, we'll answer those questions. If it is an absolute pressing question, I'm talking about a very, very pressing emergency question, just unmute yourself and then go ahead and ask your question or comments, right? So we always appreciate insight. We always appreciate feedback. So just understand that formally, we will have a Q&A at the end of this presentation today. Happy 2022, by the way. Happy New Year. I pray that you are having a prosperous and abundant new year. And I pray that you continue to do so and have a great rest of the year. With that being said, let's get right into the agenda for tonight. I'll be kicking it off with an introduction of who I am, and I'll also introduce a few team members. My apologies in advance if I don't get to somebody, but I do know who's on my team on this call today. We'll talk about some changes. What happened last year, right? All the changes that will affect the 2022 tax season that we're currently in. Yes, we are in tax season. Badu Tax Services is filing taxes right now as we speak. The IRS has already opened the filing season for businesses, partnerships, S corporations, C corps. C corps as well. Those are open. Individuals won't be open until later on, but we are still filing right now as we speak. We are submitting tax returns right now as we speak. So although the IRS may say January 24th is the official tax season date, we are locked and loaded and we're ready to file the taxes right now as we speak. We'll also talk about some tips, some things that you can do throughout the year to not only save you on taxes, but make sure you're on the right track when it comes to the filing so that it doesn't become a nightmare, right? Everything is nice and organized and everything is in order for you to get your taxes submitted well in advance of the deadlines. And we'll talk about those deadlines today, which one of them just changed yesterday, actually. We'll talk about how to keep track of your books and records. For some of you, this may be a re-emphasis, right? Using QuickBooks to track your income and expenses in your books. I personally just finished reconciling my books today, and that's across 12 businesses, right? In the Badu enterprises. We finished all our reconciliations today, and we'll be proceeding to filing our income tax returns either tomorrow or by Friday. So we like to get ours out the way so that we can take care of our clients and make sure everything is nice and organized. At the end, as mentioned before, we will save about 10 to 15 minutes for some Q&A. Right, we'll save 10 to 15 minutes at the end for some Q&A, just so you can be able to ask your questions and we'll be able to answer them for you. And we'll probably need 15 minutes today. So we'll try to breeze through this a little bit because we do have quite a few folks on today. We got 32 people on the Zoom today. So I know there's going to be a lot of questions. With that being said, let me formally introduce myself. My name is Jeff Badu. I'm a licensed certified public accountant. I do have a formal education. I graduated from the University of Illinois at Urbana-Champaign with a bachelor's and a master's degree in accounting. I am originally from Ghana, which is where I recently visited, last month on my trip, end of the year trip. And it was very, very nice to see my roots, see my family, and it was also eye-opening as well. I do want to shout out to Jerry, who also came on the trip with me, and we had a great time with the family. All right, Jerry, by the way, Jerry Balfour is my brother-in-law. For those who don't know, I am a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises LLC, which is a multinational conglomerate in the finance industry. What we do is we provide a suite of financial services, including our marquee company, which is Badu Tax Services, which happens to be the host of this event tonight. It's a tax firm or CPA firm that provides tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the US. And we also have clients that reside in over 25 countries at the moment. Now, this is the part where I want to make sure I don't forget my team, right? So I do want to shout out to the team. I'll just mention your name. And then if you can maybe just give us a wave or a thumbs up, that'll be greatly appreciated. We got Jerry, Mr. Jerry Balfour, who is our Chief Project Manager of Badu Tax Services. Thank you for joining us, Jerry. All right, let me make sure we got everybody muted on this call today. Welcome everyone who are just joining. We're asking that if you are not speaking, you just mute your mics so that there's no distractions, background noises, or anything like that. So thank you once again for joining tonight. So I do want to shout out to Jerry. Thank you for joining us tonight. Do want to shout out to the champ in the building, Mr. William Champion, the Chief Operating Officer, COO of Badu Tax Services. Thank you for joining us all the way from Phoenix, Arizona, or I'm sorry, Arizona in general, right? So close by Phoenix, right? Yes, sir. All right. Then we also have Mr. Joshua Waweru, all the way from Kenya. You know, he's one of our lead preparers. What time is it right now in Kenya, Joshua? If you don't mind, I'm muted.
Yes, hello everyone. It's around 30 minutes past 3 a.m.
3 a.m. Holy cow, 3:13 a.m. right now in Kenya. And he's still joining us. That just goes to show you his super hunger and dedication. Thank you to the humble one, Mr. Joshua, for joining us tonight. Then we got Ms. Latoya Wallace, who's one of our lead preparers as well. Shout out to Latoya. Thank you for joining us. We got Mr. Darion Wiggs, who's one of our new lead preparers. He's also a CPA. Thank you, Darion, for joining. Rising star for sure. And we got Ms. Desi Horton, all the way out in Texas. Thank you for joining, Ms. Desi. She's one of our lead preparers. And then I also see, let me make sure I got it right here, Mr. Eugene Marshall, who's one of our project managers, who's one of your first point of contacts in the firm. Thank you, Eugene, for joining us tonight. And this is the part where I want to make sure I didn't miss anybody that's on my team, because I know they'll kill me if I miss them. So let me just scroll through. All right, I didn't miss anybody. All right, so thank you everyone once again for joining. So that's the Badu Tax Services team. That's just a portion of our team. Thank you once again. We also have Badoo Investments Llc, which is our, real estate investment company. And what we do with that company is we invest in apartment buildings, mainly on the south side of Chicago, in efforts to restore traditionally underserved communities. And right now we have 218 units at our control on the south side of Chicago. And our goal is to provide them with better housing, right? Stable housing in exchange for cash flow, right? And also a better community overall. We also do happen to run a not only now life insurance, but also health insurance company known as Badu Life and Health Solutions LLC, which provides life and health insurance solutions to individuals, families, and small businesses. My wife couldn't join us tonight, Ms. Yvonne Badu, but she is the CEO of the company. She actually just left for work. She's a nurse as well that works overnight shifts. Then we also have the Badu Foundation, right? One of the reasons why I'm here today is because I love teaching financial literacy. As a matter of fact, if I could drop everything on the planet and only keep one thing, it would be the foundation. That's where we teach financial literacy to kids, right? Kids ages 6 to 18, young adults, the youth, right? Ages 6 to 18. And we teach them on topics such as budgeting, saving, investing, and scholarships. My purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. For those who may have missed that, let me just repeat it one more time. My purpose in life is to inspire and support the super hungry, including the 41 of us who decided to volunteer our time, our precious time, to take hold of infinite resources, such as the information you're about to listen to and what God has manifested in me to give to you in order to create an abundant, not a scarcity, but an abundant lifestyle. Everything we do is surrounded around that sole purpose, and there's nothing that we would do on this planet moving forward that does not tie to that purpose. With that being said, let's talk about why everybody came here today. So in 2021, there was a lot of things that happened. As you guys may recall, there was a big stimulus package that was passed right at the end of the Trump administration's term, right? And that basically created the stimulus check number 2, right? There was a second stimulus check, and that was at $600 per person, $600 per person in your family. And it also created a lot of different programs, such as the increased, PPP, Paycheck Protection Program, EIDL, Economic Injury Disaster Loan, right? So there are a lot of things that happened there with the second stimulus package, right? And then we had a third stimulus package that came about under the Biden administration, the new administration, which caused a lot of changes as well. Now their administration was more so focused on the individual side. The Trump administration was focused more on the business side. And then towards the end of last year, we also had this infrastructure package, right? We had an infrastructure package that was passed that created a lot of different tax provisions as well, which I'll be talking about today. Now, there was one more thing that was supposed to happen, but for whatever reason, it might have been the Omicron variant or something that happened in the air. But there was supposed to be a major tax reform that was supposed to be passed last year. We were expecting it to be passed, but it did not pass, right? It did not pass. It was going to change a lot. It was going to revamp the entire tax code for the first time since 2017. But that doesn't mean it won't happen. There is still a high likelihood that it will happen this year. I think what Congress is doing right now is they're trying to get their priorities in order, make sure they take care of these vaccine mandates and, all the various cases that's going around. I mean, the world is really centered around COVID-19 nowadays, right? Everywhere you go, everywhere you turn, there's always something about COVID-19. And can you believe we've been in this for 2 years now, right? It's crazy. So with that being said, I know it was a lot of things that happened last year, but for 2022 tax season, we want to give you a recap of some of the things that you need to look out for as you file your taxes for 2022 and possibly many more years to come. Number one, there's a tax credit known as the Employee Retention Credit, ERTC, or ERC for short. Basically, this credit allows you to get a certain cash back, right? A rebate, we call it, where as long as you kept your employees and you paid them and your revenue fell down by a certain amount, between 25 to 50%, when you compare the quarters in 2021 compared to 2020, you would have gotten a credit, a cash back from the IRS, right? This is usually done through your payroll company, or they have special credit companies that allow you to apply for this credit. As a matter of fact, we do work with a provider known as Layton, that actually helps assist with that credit. Unfortunately, that credit was terminated early because they needed to reallocate certain funds to the infrastructure package. Infrastructure package is meant to fund things like roads, bridges, electric vehicles, and all the different things that's causing the global warming and everything like that, or causing, potholes in Chicago and all that. They're looking to fix all of that. Of course, they can't fix every single thing, but they created this infrastructure plan to fix roads and various infrastructures in America. All right. So Unfortunately, that led to the termination of the ERC credit, the Employee Retention Credit, and that was terminated as of September of 2021. So that credit no longer exists, nor does the PPP, the Paycheck Protection Program. Funds have completely run out. There's no signs of it coming back anytime soon, although we have all these variants. We got Delta variant, Omicron variant, and who knows, maybe soon the Zeta variant. All right. So with all these variants in the world, these tend to create programs, stimulus checks, and business funding programs like PPP, EIDL. In my opinion, I've never seen better funding programs than what we saw with the COVID-19 programs. Right, we have PPP, the Paycheck Protection Program, which provided forgivable loans, right, free money basically to everyone who owned the business. And then the EIDL, Economic Injury Disaster Loan, not only a loan, don't let the word fool you, but also a grant, a $10,000 grant, which got increased to $15,000 grant last year, 2021. Those programs have expired, at least for those who are trying to apply, submit new applications. Those programs are out. You cannot necessarily apply for them. They may come back in the future. One thing to note too, EIDL was not only a COVID-19 loan. EIDL has been around for a long time. It's for other disasters as well, floods, hurricanes, right? The EIDL has been around for a long time. So that program will always be here. But PPP, I don't know if it'll ever come back again. So the funding programs, unfortunately, they're out when it comes to COVID-19. The economy is doing really hot. The Federal Reserve is thinking about increasing interest rates at least 3 times this year. So with all that outlook, I do not think that we'll have another program like this. But who knows? The skies may fall. Who knows? We may be in the end times. Who knows, right? So the thing about 2022 is it's very hard to know anything as it relates to the programs or as it relates to, the funding, the taxes, and things of that nature. But what we do know is what you see on the screen today, right? Meals are now 100% tax deductible. As some of you may know, right? Some of you are tax planning clients of the firm, and I do want to thank you for your support and for allowing us to be able to help you out with your tax planning needs. So meals, whenever you go out to eat or you're dining in, or you're inviting people over for lunch, dinner, whatever it is, Super Bowl party, perfect example. As long as you discuss business before, during, or after the meal, you can write that off as a tax deductible expense. Now, before 2021, it was only 50% tax deductible. That was the challenge. You spend $10,000 in meals, you only got $5,000 tax write-off, which reduced your taxable income by $5,000. However, as of 2021, last year, the Trump administration implemented something very nice. They said, you know what, restaurants are struggling, restaurants need help. And so why not increase, why not bump up, why not incentivize business owners to go out and eat at restaurants or buy food basically, and give them 100% tax deductible meals. So that $10,000 you spent on meals is still a $10,000 tax deduction. This applies for both 2021 and 2022. So meals are now 100% tax deductible. No need for a 50% haircut on your tax return anymore. I think this is a really, really nice incentive, especially for those restaurants that have been hit very hard with the COVID-19 pandemic. So meals are 100% tax deductible. Number 3, some may hate this. I don't know if many people will like this, but cryptocurrency, Bitcoin, right? Ethereum, Litecoin, Dogecoin, Shiba, all of these different coins out there, Ripple, all these coins. Unfortunately for some, brokers must now send you a 1099 for your gains and losses. Let me repeat that one more time. Cryptocurrency, which is becoming a very, very popular asset, is now, as of 2021, representing about $3 trillion of the world's economy. $3 trillion. Due to that, there's a lot of money flowing out there. Unfortunately, there's some people doing some illegal things with it, right? There's some people that may be, for example, buying illegal substance, drugs, for example, with cryptocurrency. So what the government said is they stepped in, and this was one of the biggest fears when crypto came out, really in 2008, was that they didn't want the government to get involved. Well, the government is now involved because there's more people buying into cryptocurrencies. So with that being said, brokers must now send you a 1099 for your transactions, your gains and your losses. All right, so if you sold Bitcoin, you bought it for $1,000 back in let's say 2018, and now it's at $50,000, well, you got to pay taxes on that $49,000 gain. However, through some tax planning, you know that you can reinvest that profit into an income producing asset such as rental real estate, right? Or something like an opportunity zone, for example, where you can invest into a property that's about to be renovated and rented out to somebody else. So it's still income producing asset so that you can avoid the taxes on that $49,000. That's more on the tax planning side. From a tax preparation side, though, please expect if you have Coinbase, if you have crypto.com, and I'm sure, by the way, they're going to apply these to NFTs, right? NFTs as well. And if you don't know what NFTs are, I do encourage you to gain some knowledge on them, right? What NFT stands for is they are essentially non-fungible tokens. They are basically like Bitcoin, similar to Bitcoin, they're digital assets. So cryptocurrency reporting, crypto asset reporting, they're saying any digital asset that you're trading, now the brokers that you're on their brokerage, they have to send you a 1099 to show the gains and the losses. All right, so that's a big thing to keep in mind. Last but not least, PPP forgivable loans. If you receive a PPP loan and it was forgiven, you do not owe taxes on that money. Let me repeat that one more time. If you receive a PPP loan and it was forgiven, you do not owe any taxes on that money. And if you spent the money on eligible PPP expenses, such as payroll, utilities, rent, mortgage interest, guess what? You can deduct that even though it's forgiven and you didn't have to pay taxes on it. If that's not the best loan on the planet, which of course was forgiven, forgivable loan, I don't know what is. The government literally handed you free money and said you can write it off and you don't have to pay taxes on it. You know, there's not too many tax-free loans or tax-free distributions from the government that I'm aware of, right? Of course, what does the government use to fund these programs? Tax-paying dollars. And right now, the government is over $20 trillion in debt, over $20 trillion in debt, right? That's probably why they paused some of these programs, by the way. So overall, if you receive the PPP loan and it was forgiven, you don't have to pay taxes on it. And you'll notice in our tax preparation checklist for our firm Badu Tax Services, and that we include a section at the bottom of the checklist saying, hey, did you receive a PPP loan? Was it forgiven? If so, then you don't have to pay taxes on it, and you can still deduct expenses you use the money for, assuming they're business-related expenses. Let me take a quick pause here and welcome everyone for joining. For those who are just joining, this is the 2022 Tax Tips and Changes webinar. And we're basically talking about business changes, business tax changes, and personal tax changes. Certain things that happened in 2022 as part of 3 tax reforms. We had 3 tax reforms last year. Not 1, but 3 tax reforms in 2021. Now, they weren't major tax reforms. The major one is coming, I believe, this year. But these are all things that you need to pay very, very close attention to. All right, so the next one applies more to the individuals. So there wasn't a whole lot of changes on the personal side. I'm sorry, on the business side, but there were a ton of changes under the personal side. We do have, you know, a Democrat in the office under Joe Biden. And so it tends to be more on the personal side. So what happened? Well, some of you may have received a third stimulus check. You may have received $1,400 per person in your family in your bank account. Now, it is free money from the government. Of course, it's not really free because you probably paid some taxes in the past to accumulate to this money. But you do have to reconcile your stimulus check on your tax return. So here's my advice to you. Number one, the IRS is going to send you a letter 6475 in the mail confirming how much you received for the stimulus check. My advice, compare this amount to what's in your bank records, your transactions. You should have received the stimulus check payment. I believe it was around April or May of last year. It was around tax season last year. So you should have received that payment in your bank account. It's $1,400 per person, right? So if you got 2 people, it's $2,800 basically. My advice to you, compare the amount, reconcile the amount that's on the letter to the amount on your bank account, your transactions, your statements. If the amounts differ, then what you need to do is, what I would recommend is contact the IRS and ask them, hey, IRS, I just got a letter from you saying you sent me $2,800 for my third stimulus check. However, I received $1,400. What happened? Now, it is $1,400 per person that was on your tax return as of 2020. However, for some people, it was as of 2019. So if you had a newborn baby in 2021, right? If you had a newborn baby in 2021, then you may have not gotten that third stimulus check that you are entitled to though. So that's why it may be different. So you may want to do some recalculation as well, saying how many people were in your household in 2021 compared to 2020. If the number has increased, then the IRS probably owes you more money in stimulus checks. This credit is known as a recovery rebate credit. Recovery rebate credit is when the government, the IRS, has not sent you enough stimulus check payments, right? So you're claiming a credit because they didn't send you enough or they didn't send you anything at all. Well, what if your income went down in 2021 compared to 2020? Well, you're entitled to a stimulus check then if you didn't receive the full amount. So in our checklist, we do include a section in there that has some instructions saying, hey, please check your bank records. Hey, did you receive letter 6475? Please compare that number with what you received in your bank account. And then when we file the taxes, right, if you had an increased number of people in your household, maybe a newborn baby, congrats to those that had newborn babies in 2021, then you are entitled to a stimulus check or the recovery rebate credit, also known as the economic impact payment. They're all terms used interchangeably. All right, so we got about 12 more minutes to go on the presentation, and then we'll open it up for some Q&A. I see a lot of comments in the chat. I haven't even opened it yet, right? That's a whole can of worms. But we will address those 15 minutes before we end for today at 6:45 p.m. Central. The next thing you want to be very cognizant of, especially if you have kids under the age of no longer 17, but under the age of 18. They changed the age. So it's no longer, if you're 17 and older, you no longer qualify for the child tax credit. Now it's 18 or older, you don't qualify for the child tax credit. So they increased the child tax credit from $2,000 per child to $3,000 per child. And then if you have a toddler, someone who's under the 5 years old, then it's $3,600 per child, right? Now, here's where it gets a little tricky. And to be honest, I understand why the IRS did this, but in a way, I wish that they didn't, because they sent half of the money in advance through monthly payments throughout the year as an advance. So if your refund check, comparing apples for apples, right? If your refund check from 2020 was, let's say, $4,000, and now it's, let's say, $2,500, and nothing has changed, that means you got an advance of the child tax credit, more than likely. So although they increased the child tax credit, they also sent you half, or they should have sent you half in advance, assuming you opted for it, right? So this was sent in increments. They took $3,000 or $3,600, they divided it by 12, and they sent it to you in the form of monthly payment. Now, to reconcile this, you'll receive a letter 6419 from the IRS. It will come to your mail. If you've moved, please communicate that with the IRS, right? Let the IRS know that you've moved. You could always fill out a change of address form online, right? Or you can contact the IRS and let them know you moved. And when we file your tax return, we can always update your address. But the sooner you do it, the better, so that the proper letters go to the proper places. All right. So what I would recommend you do if you have a child, whether you had a newborn baby or you have kids in general, and they're under the age of 18, I would recommend that you look at your bank transactions. They were sent monthly starting July, I believe it was July 1st, 2021. And you should have seen six payments of the same amount, basically, right? And by the way, for the recovery rebate credit or the stimulus checks and the child tax credit, there is an online portal that you can log into to check this information as well. But you should have received six payments as an advance, right? As an advance to the child tax credit. And then when you file your tax return, then you get the rest. Someone may be wondering, well, where are my payments? Why didn't I receive a January payment? It's because you haven't filed your 2021 tax return yet. You'll get the rest when you file your taxes. This is one way of the IRS making sure that you stay compliant with tax rules and regulations. They do not play when it comes to the taxes. All right. So in our checklist, we do also include a note about that to reconcile the child tax credit. At a minimum, look at your bank transactions, see if they match the letter 6419. And then if it comes to our attention that you are entitled to more, we'll let you know. And then we'll go ahead and proceed with that as well. All right, so last change slide here is that the child independent care tax credit also increased. It's now at $4,000 per child. Man, this is a massive one. All right, it used to be $600 per child. $600 per child, and this is an actual credit. This is money in your bank account. This is not a tax write-off. So $4,000 per child, and if you have multiple kids, then it's $8,000 per child, right? Or a dependent. On top of that, the earned income tax credit did increase. For those with no dependents, those with no kids, at least yet, the credit increased from 543 to 1502, and also the age changed a little bit as well, because there's people that are working that are younger, and so they did reduce the age requirement as well. If you receive unemployment in 2021, up to $10,200 is not taxable. Once again, if you receive unemployment, up to $10,200 is not taxable. Unemployment is taxable as income. However, up to $10,200 is not taxable. All right, last but not least, the premium tax credit, which is a credit for health insurance. You can potentially get health insurance for free. You may have received an email from the firm saying, hey, we've partnered with a health insurance company, right? We actually offer health insurance now through Badu Life and Health Solutions LLC. So open enrollment, you still have until January 15th. You still have until January 15th to sign up for health insurance, open enrollment. It used to be December 15th, but now it's January 15th. You can actually get a credit, right? Okay, let me make sure we mute everybody joining. You can actually get a tax credit for health insurance, which can potentially reduce your health insurance premiums to zero. I have clients that pay nothing in health insurance each year, right? Because of the premium tax credit. And we know how expensive health insurance can be, right? So please take advantage. If you receive that email and you're interested, please respond to that email. We'll set you up with the proper consultation with our team member that handles the health insurance side of things, and we'll get you taken care of. Unfortunately, we're not able to service all states just yet, namely states like California. However, right, we are in the process of getting the necessary licenses and everything set up in those states as well. All right, so what are some tips? We got 5 more minutes to go until we get into the Q&A. I see 24 comments in the chat. Number 1, file early. File early. My advice to you, 2022, please file your taxes early. No need to wait until March 15th, April 18th. That's what causes the stress, and that's what causes the penalties. File early, right? For us in Badu Enterprises LLC, there's 12 entities. I just finished reconciling the books today, and I'll be filing all the tax returns between tomorrow and Friday. Get it out the way, submit it to the lenders. We work with a lot of lenders because we own real estate and we're in the process of acquiring real estate. So our lenders need our tax returns ASAP. My advice to you, get your taxes done early. March 15th is the deadline for partnerships and S corporations. April 18th, it used to be April 15th, but due to a recognized day, right, by the IRS, they decided to extend it to April 18th now. Individuals and C Corps, your tax returns are due by April 18th. If you need our firm, Badu Tax Services, to file your tax return, we need your documents at least 15 days before those deadlines. Number two, reconcile your 2021 books. Go into your bank statements, or if you have a bookkeeper, sit down with them, meet with them, look at the transactions, see if there's anything off, right? Look at your finances and see how you perform for 2021 and use that to file your income tax return. Also, QuickBooks is best to use as well. That can help you track your income and expenses throughout the year. All you're doing with QuickBooks is you're linking your business checking and or credit card account. It's populating all of your transactions for you. And you're just going in there and saying, hey, this is income, this is meals, this is travel, this is utility, this is home office, this is that board trip that I took, right? Whatever it is, you go in there and you categorize it in QuickBooks. My advice to you too, deduct everything, right? Deduct everything, meals, travel, laptop, your cell phone, a suit jacket that you're wearing to host Zoom meetings, right? The AirPods that you're using to listen to the Zoom meeting, all right? The books that you're reading to help you educate yourself when it comes to business and life in general, all right? The water that you're drinking to stay hydrated during the Zoom meeting. All of these things should be deducted. Your laptop, cell phone charging, right? Pens, everything, deduct it all, at least include it in your QuickBooks. And then maybe if you're buying a house or something of that sort, we can always work with you to make sure the numbers are in line and they look good to the lenders as well. And then my advice to you too, this is huge, communicate throughout the process. When you're filing your tax return, even with a professional, it is a two-way street. It is not a one-way street, right? Communicate with your tax preparer. Say, hey, I have these expenses. I have miles that I didn't include in my QuickBooks. Hey, I just received something from the IRS. Can you take a look? Communicate. Now, if we need something from you, we'll let you know. But we also ask in return, if we need something from you, there's a reason why we need it. Right now, there may be a few occasions where some documents may go missing in the email, right? And our sincerest apologies for that. But overall, it is a two-way communication throughout the process. Our team will try our absolute best in every power to properly communicate with you. We do have a revamped team this year, one of the best that I've ever seen. So we do have some new faces. We do have a lot of training over the past 3 months or so. We've been going extremely crazy on the training. I've never seen people get trained more in my life. So we are prepared. We are filing taxes right now as we speak. If you get your documents, your W-2s, feel free to let us know via our support email or our website, badutaxservices.com. Now, we are running short on time. Most of you may be familiar with QuickBooks. So my advice, I encourage you to get it. It's very professional. It's a nice full-blown accounting software. And there are plenty of discounts offered if you're working with someone like myself, who's a certified QuickBooks Pro advisor. It saves business owners a ton of time, 10 hours a month on average. What can 10 hours a month do for you in your personal life and or your business life? 10 hours a month, right? It's huge. So with that being said, I did promise we'll end at 6:45 p.m. on the dot, and it is 6:45 p.m. Central. I do want to thank everyone for coming out tonight. It's always an honor and a blessing to have, people who are like-minded to come and listen to something like this. So this is formally the Q&A. You can always unmute yourself or you can ask your question. We do have a lot of stuff in the chat, so we will be addressing those first, and then we'll go into the open Q&A. So here's our contact information. Here's my contact information, at least. My email address is jb@badutaxservices.com. Once again, that's jb@badutaxservices.com. Our phone number is 773-819-5675. Once again, 773-819-5675. Very important, our response rate during tax season is within 48 hours. After tax season, it goes back down to 24 hours. So very important to keep in mind. Our website is badutaxservices.com. And with that being said, let us open it up for some Q&A. All right, thank you everyone for joining. So let me go ahead and open up the chat. I know we got a lot of questions. Holy cow. All right, so let me see here. All right, so Eugene, let me go through some comments as well. Eugene says, yes, sir, catching up on emails. All right. Okay, so let me see here. LOL. All right, explain what you mean by brokers, exchanges. So when we say brokers, we're talking about like E-Trade. You know, we're talking about places like Coinbase. We're talking about, you know, TD Ameritrade, right? Those are the places that we're talking about essentially. So broker is where you house your money to invest your money essentially. All right, so friend says you only pay taxes on gains for crypto if you actually sell, correct? It's a little complicated, but if you trade crypto, if you trade one crypto for another crypto, you could potentially have to pay taxes on that as well. But typically it's only when you sell, right? All right, Delonte says Coinbase will send theirs out by February 1st. Thank you, Delonte, for mentioning that. Jerry says selling it and using the crypto as a form of payment. Yes, absolutely. Thank you, Jerry. And then Joy says great news. Princess, thank you all. And then Daniel says define sell, like when the flat USD hits your bank account, or what if you sell profits into a stable coin and keep the money on the exchange? Sell means to transact, basically. You're trading one coin for another, whether it's a USD coin or whether it's a, you know, a Dodge coin, or, you know, if you're trading Bitcoin for Dogecoin, that's a taxable transaction, right? Whether you transferred it to your wallet and, you know, let's say you have a wallet that's in the US and then a wallet in Ghana. If you're trading those two wallets nowadays, hey, this is the government we're dealing with. They want every penny, right? So they're going to consider everything as a sale. All right. William says, yep, cash in your account. Yeah, in a way you can call it cash in your account. That is one way to look at it. And then Jerry defined it. Selling is defined as trading cryptocurrency for flat or fiat, like the US dollar, or for another form of currency, right? He just defined it exactly as I just stated. To my knowledge, stable coins are still considered as virtual currency to the IRS. Amen to that. Thank you, Jerry. All right, and then Prince says, Daniel, I was talking about flat USD. The second scenario will probably get taxed as well. I'm guessing it would be considered a taxable crypto event. All right. Yeah, a lot of stuff for cryptos, man. You guys got to be careful with this crypto stuff. They are cracking down heavy, right? They are cracking down heavy. So cryptos are basically stocks. Think of them like stocks. When you trade one stock for another, what happens? You get taxed, right? When you trade a stock, where you sell a stock and you make a profit, what happens? You get taxed. Unless, and you'll probably hear me say this 1,000 times this year, unless you acquire an income producing asset, such as rental real estate. Why? Because there's the biggest D word on the planet known as depreciation. That's a big tax write-off that you can take advantage of. All right, so let's see. Matt says we won't be getting 1099s for crypto decks. Will we need to provide records of any transactions on decentralized exchanges? I mean, technically yes, right? Technically yes. The answer is yes, Matt. That's if you sold, right? So one thing to note here. So if you sold it and you made some money, yes, let us know, report it, because they're cracking down heavy on cryptocurrency right now. Unfortunately, there's some people doing a lot of illegal activity with cryptos, such as buying all types of illegal, like firearms, drugs, all types of crazy stuff. So they're cracking down when it comes to the cryptos. Unfortunately, it's no longer really decentralized, in my opinion. All right, so if you do not notify your tax preparer and receive the advance tax, this will hold up your tax return. Absolutely, your refund will be held up. All right. So Daniel says the can of worms has indeed opened. Indeed, they have. Indeed, they have. Remember, this just got passed like 2 months ago with this whole cryptocurrency thing. So just 2 months ago, this was part of the infrastructure package that the Biden administration passed. And then William provides some very useful links. I encourage you guys to take down those links and visit them if you have a child. All right. So he posted a child tax credit link. And then Prince says, for real, crypto taxes are going to be a pain, especially if you use DeFi protocols. Man, fancy terms. And then Jerry says, Matt, it would be in your best interest to report this activity as well. Thank you, Jerry. The IRS and the government are cracking down on reporting. Man, Jerry's reading my mind, literally, on reporting for crypto from investors with a lot of activity. But there are plans for this to work in its way down to some of the decentralized exchanges. All right. So Daniel says, I had a baby 12/30/2021. Congratulations to you, Daniel. That is awesome. Would I get the $3,600 child tax credit and the child and dependent tax credit of $4,000? The answer is yes, you would get the $3,600, the child tax credit. Absolutely. You're fully entitled to it because the baby was born before the end of the year. Even if the baby was born on December 31st, right before celebrating New Year, right? That still counts. Now, if you spent a decent amount of money, so the credit is up to 50% of what you spent in dependent care expenses. I assume you did not spend more than $8,000 on a child, 2 days into the year. So, and that's for a child in dependent care, like daycare, nanny, those things, not hospital bills or anything like that. So I would say you're most likely entitled to $3,600. Jalen says, if you use credit card points for trips, can you deduct the trip? Technically, no. Because it's, it cancels each other out. The points count as income, and then the trip will count as an expense, so it zeroes out each other. All right. Delonte says, congrats on the new baby, Daniel. That is the best birthday ever. Absolutely. And he says, thank you. And then Elena says, was the crypto asset part in business tax section because it impacts the crypto brokers, but on a personal tax level, we'll have to file the 1099s on gains and losses. I put it in the business section because we do have some clients that own cryptocurrency businesses. Right, they trade cryptocurrency for a living, basically. They're active day traders. So I felt it was more appropriate to put it in the business section because it's more of a business activity. So yeah, you're going to get a 1099 in your name or in your business name, right, from the broker, such as Coinbase or crypto.com. All right, so Abraham says, if I house hack my duplex for write-offs, are the numbers divided by 2 or can I write off the full amount? Yes, you divide it by 2, except for your mortgage interest and your property taxes. Desi says, congrats on the baby. Man, we have a lot of comments in here. I promise we will get to the open Q&A in a second. And let's see here, because that is my birthday. Okay, absolutely. All right, thanks again for hosting this, Jeff, and the entire JB team. Congratulations, Daniel. Yeah, congrats, Daniel. Man, you're getting a lot of praise on here. That's awesome. All right, so let's see. Joy says, I'm a new business owner. This has been very challenging in tuition. You guys have been a godsend. Shout out to Eugene and Latoya. I would do better this year. Thank you, Mr. Badu. Thank you, Joy. Appreciate it as usual. Is the money invested in crypto mining machines deductible? Yeah, I would think you can claim some type of depreciation expense on there. Now, I would have to do a bit more research specifically on that, but the machine themselves for sure is a capital asset. You depreciate over 7 years. And in reality, over a 7-year period, you get to claim bonus depreciation as well. So yes, to answer that question, it is deductible. And then Latoya says, Joy, you are very welcome. Looking forward to an amazing tax year. Absolutely. Elena says, regarding the stimulus, basically, if there is a discrepancy between the letter and the bank deposit, we should call the IRS and let them know. Are there other parts of this that I am missing? So Elena, so after you've done that reconciliation, that due diligence, I would go on that IRS portal, the stimulus check portal, and just see what they're showing on there. Because they might sometimes show the dates they send you the money, the total amount. But to be honest, and I always hate saying this, but there's not a whole lot we can do about that, right? Because we can definitely file the tax return, try to claim, try to get you more. but that's only going to hold up your refund. Maybe there's a reason why there's a lower amount, right? I would say the best thing to do, they have a specific number for stimulus checks now. So I would contact that number directly. If you search IRS economic impact payment or IRS stimulus check, it's usually the first link, and you'll be able to track your stimulus payment on that site as well. All right, Abraham says, I bought a rental property on December 15th. Should I put it on my taxes for this year, 2021? Absolutely. We actually closed on a 31 unit building on that day. And we're about to get a big, ginormous depreciation tax deduction because it was purchased before the end of the year. So yes, you should put it on your taxes. All right, so last two comments. Linda says, thank you, Jeff and team. You've been so helpful this year, and I look forward to working with you guys again in 2022. Thank you, Linda. Aisha says, can you deduct nanny salary? No, not directly unless you hire your child in your business, pay them a salary of $12,000. You write it off, they don't claim it as income, and you get to write off a portion of the daycare or nanny expense. So you get a $12,000 write-off for hiring them in the business, right? Your child that's doing actual work, right? Cleaning the home office, shredding paper, whatever it is they're doing. You pay them $12,000 salary. That's the maximum we recommend. And we get to claim the daycare, right? We get to claim, let's say it's 4,000 credit per child. We multiply that by 2. So you spent 8,000 basically, right? We take that 8,000, multiply by 50%, and we get that 4,000 amount. So 4,000 is a credit, but the 12,000 is a deduction. So in total, at a 25% tax rate, if we take $12,000, right, 12,000 times 0.25, that's a $3,000 cash back in your pocket. Plus 4,000, that's $7,000 that you got for daycare. Nowhere near how much a nanny would cost, of course, but hey, 7,000 is better than nothing. Yvette says, if you acquire a tax lien property, can you write off those taxes for the year, even though there is a 365 redemption? I would say yes. You know, it really depends, you know, because technically when you're buying a tax lien, you're really buying the rights to the property. You're paying the taxes, or you're buying the rights to pay the taxes. So as long as you paid the taxes, and technically, yeah, that's a property tax deduction. And Desi says, boom, there you go. All right, so we got a few minutes left. Any questions at this time, please? You can unmute yourself, or you can type your question in the chat. Thank you all for joining once again. Please feel free to ask any questions or comments.
Over that the tax benefit of hiring your family members, Jeff.
Yes,
let's
sir.
say you, in this case, we established a business in 2021. You kind of went over that. I kind of missed it, but it was great. You hire your wife or spouse and whatever child, multiple children, if you will. But let's just, in this case, my case here, just spouse, daughter. Okay, could you shoot from there? Do a formal hiring, just like a typical, you know, give them a W-2 and do all that, or what if my daughter was helping me and doing some practice of work, you know, some stuff here, like you said, shredding paper, cleaning the home office, these types of things. What is the formalities and the criteria that the IRS would hit back on you or slap your hand for if you don't do it the correct way?
Yeah, great question, Delonte. And that's a question that can open up a whole can of worms. But to keep it simple, right? All you're doing is creating an employment agreement between your business and your child. They have to be at least 7 years old. So that's one part that I would want to mention. They have to be of age where they can do something basically that can, in a way, benefit the business. Shredding paper, right? Cleaning the office, doing marketing, going to your board meetings, and being a board advisor to the board meeting. That could be one. So you have to create a formal employment agreement with the child, son or daughter, right? And you have to state what they do. You have to state how much they will get paid, how often they get paid. And all you're really doing is you're transferring money from your business account, your business checking account, into their personal account. and then you use that money to pay for the daycare or to fund their 529 college savings plan, the Roth IRA, their permanent life insurance policy, buying them a rental property, whatever it is. And it's $12,000 per child. Why is it $12,000? Because the standard deduction in the good old United States of America, land of the free, home of the brave, is $12,000. All right, so it does have to be a little formal, just an employment agreement. It could be one page. They do have to actually do the work that you state that they should be doing. And you don't have to send them a W-2, nor do you have to send them a 1099 because they're your child. They don't pay any taxes on the $12,000 because up to $12,000 is exempt from taxes, even self-employment taxes for a child. And then you get to write off the $12,000 on your tax return. They get to do whatever they want with the $12,000. They can pay the nanny. They can, they can invest the money. They can do whatever it is that they want, that they please. Does that answer your question, Delonte?
Yes, sir. Thanks so much.
Absolutely. No problem. Now, I would recommend you place this money in a trust to take it to the next level. You set up a trust for them. You set up some sort of revocable living trust for them. And then you place the money in the trust, right, in their name. The thing is, the money has to be in their name. So you set a trust up for them. You put the money in the trust. That way, you trust that they won't screw up the money. So that's what it is. Now, if it's not in the trust, then they could try to do whatever they want with their money. But then again, there is custodial rules and all that, parental and all that good stuff that can basically prevent them for splurging with the money. All right. So Yvette asked, if I have a job, a W-2 job, and I get someone to help complete the work, how would I pay them? And is there a way to deduct it? Well, it's real simple. You do have to engage in a professional payroll company, such as ADP, or there's also companies like Paychex, Gusto, QuickBooks, and you have to create an employment agreement with them. Or you have to create an employment agreement with them. And when you create this employment agreement with them, it basically lays out how much they're paid, how often they're paid, how many hours they work, right? The whole nine, basically. Then you're sending them, just like maybe you've had a job in the past, right? You're sending them pay stubs, or you're sending them money into their accounts every 2 weeks. You're sending them pay stubs, and then at the end of the year, you send them a W-2. So this usually has to be done through a formal payroll provider, such as ADP, right? This is something we do not want to do on our own. We don't even handle payroll, right? That's how complicated we believe it is. And then last question, and then we'll open it up for maybe one more question. I know we're over the time. How is depreciation calculated? It is you take the purchase price, subtract land, let's say 10%, right? Purchase price times 10% divided by 27.5, unless you do some accelerated depreciation through cost segregation, which is a bit more advanced. That's where you can claim up to 25% of the building's purchase price in the first year as a tax deduction, right? You get to claim up to 25% of the building's purchase price in the first year as a tax deduction, right? So to give you an example, right? So we recently acquired a 31 unit building on the south side of Chicago. And essentially we acquired that building for $2.75 million. Right, so for that one, we're gonna take a land for multifamily apartment buildings. We usually take a haircut of 15%. So we're gonna take that number times 85%, right? 85% is the depreciable amount. However, we're going to do cost segregation. Even though we bought the building on December 15th, the same day you bought your building, Abraham, right? December 15th, we take this number, multiply by 0.25, and we get a $584,000 tax deduction. Can you imagine, right? In the first year of owning the building. That's called accelerated or bonus depreciation. That can reduce your taxable income from other sources by $584,000. Now, if you bought a $400,000 building, then you're getting about $100,000 tax write-off, which isn't bad at all, right? So these are things that we usually cover within the realm of tax planning. However, depreciation is either you take regular depreciation, straight line, 27.5 years, or you can do bonus depreciation where you can get up to 25% in the first year, and then the remainder goes over 26.5 years, essentially. So with that, we'll open it up for one last question, last call for questions, and then we'll wrap it up for the night. Thank you once again for tuning in tonight. Last question. All right, questions going once.
To go. Oh, I got another one.
Yes, sir.
Offshore work and resources. Those who are you have a consulting firm and hired offshore resources to offset the cost, of course.
Yes,
Can you speak to the taxes and everything of that sort and how to deal with that? It kind of goes along with somewhat what Yvette was talking about, but this is more international realm. So
yeah, here's the great thing. You don't have to send them a 1099, right? Because they're offshore, they're in a different country. You don't have to send them a W-2 unless you hired them in an employee, W-2 employee capacity, which is rarely the case, right? Because they're all the way in a different country. So overall, it's there's no tax requirements whatsoever, really. Whatever you pay them, you track that in your QuickBooks and you write it off as contract labor in your QuickBooks. That's to the extent of all you have to do when you're hiring contractor work overseas. Absolutely. Yeah, no problem. All right, last comment of the day. Adriana says to Mr. Champ, she'll be sending you an email tomorrow to prepare taxes, so please be on the lookout. Thank you, Adriana. So with that being said, let me go ahead and stop the recording.